Hello, we're talking about a couple other accounts that you might want to add in the chart of accounts that are common for a lot of businesses. So let's navigate to the chart of accounts a different way than we have been. So gear icon over to chart of accounts. And let's go through just a couple common accounts. One is inventory. So if you're a product-based business and you're holding inventory, you'll want to have inventory accounts. And I recommend that you have a sub-account for each main type of inventory that you hold. So if you had, say, for example, shirts, shoes, and accessories, then you'd want to have a sub-inventory account for each one of those. So first of all, you'd want to set up your parent inventory account, and there's one already set up in here. You can see that it's other current assets is the type, and then the detail type is inventory. So we can go ahead and set up an example sub-inventory account. And to do that, we'll go to New, Other Current Assets, and then Inventory here. And let's say we're doing accessories for this sub-inventory account, and we'll put it under the parent account, Inventory Asset, and hit Save. So now you can see we have total inventory, and then we have accessories, and we can add sub-accounts for the other types of inventory as well. Another common account that you may need, especially if you're a product-based business, is a sales tax payable account. So this is when you're collecting sales tax on your invoices. The sales tax is held in a sales tax payable account, and then when you make a payment to your sales tax board, at your state, then you will apply that payment against the sales tax payable account, and that clears out that liability. So the main thing you need to know here is that you need to have a sales tax payable account, and often this will show up when you set up your sales tax center, but just in case it doesn't, then you would have to create it, and we will do that. So let's go to New, and this is a current liability. We have a sales tax payable detail, and often you'll want to name it after the name of your sales tax agency or board. So in California, it's the CDTFA. So we could just call it that, but whatever it's called, or you can just leave it as sales tax payable, whatever you prefer, and then hit Save. So again, that is the account that your sales tax is collected into, and then when you make a payment, it's also applied against that account to clear out that liability. And then one more account I want to show you is a loan payable account, very common for business owners to take out loans. And when you get that money in, so let's say you had a $10,000 loan and you got $10,000 into your bank, you need to record it into a loan payable account. And then as you make your payments on that loan, they go against the loan payable account. So the payments of principal go against that loan payable account, and then interest goes against the interest expense account. So a little bit of detail there, but most importantly, you want to have a loan payable account, and we can create that very easily. And it's either a current liability if it's a short-term loan, so you're going to pay it within the year, or if it's a long-term loan, it goes under long-term liabilities. So let's just say it's a short-term loan. We'll choose loan payable, and then I usually like to add some detail, like who the loan is to. Maybe it's who it's from. Maybe it's from an investor, or maybe it's from a PPP loan, or whatever. So loan payable and dash who it's from. Just say this one is a PPP loan, and then Save. And now you have that account to house the initial loan payment, and then also the payments out to your lender. So just a couple of accounts that can be helpful to create, and of course you'll have additional accounts that are specific to your business, but this hopefully gives you a head start.